Hello, and welcome to episode number 8 of the US Market Open with Rufas Kamau. That's my name, market analyst at FX Pesa. So today, we'll be focusing on the US Market Open, trying to understand what are the key price levels, what are the major news to expect. The main focus will be on 3 asset classes. First, we look at the Forex market, look at the major currency pairs. Second, we look at commodities. And third, we look at the major stock market indices. So feel welcome. If you have any questions, feel free to type them in the Q&A section. And also feel free to participate. If there's an interesting market that you'd like us to focus on, then you can always suggest in the live comment section, and I'll be responding to that directly. So if you can hear me clearly, kindly type hi on the live chat, and these will confirm that everything is working just fine. Hello. So hello, Kevin, on time. Welcome to the session. Hello, John. Hello, Caleb. Hello, Anthony. Thank you guys for your responses. I think it's time that we kickstart this session. So as mentioned, we start with currencies, but before I mention anything about currencies, let's look at US oil. So US oil has been going down, and this is since last week. So whatever you are seeing on my chart, this is the 1 hour chart, and clearly I've had a very crazy swing. This happened right here on the 30th of August. So about a week ago, we have seen oil drop by a significant amount. This is roughly 11.89%. So with oil dropping by 11.89% is as a result of either of 2 factors, and these could be either demand or supply. If demand is slowing, then you could see lower oil prices, and also if supply is rising, then we're expecting to see lower prices. So considering what we have been looking at in the global financial markets, it's clear that demand hasn't significantly slowed down. It's still high for oil, and the supply side issues have not been fixed yet. So we know that Russia has halted all its exports to Europe and also to the rest of the world. So it's only selling its oil to the east, and that's China, among other countries in the BRICS. So what we are seeing here is a clear squeeze in oil supply, and this is affecting the West, and that is mainly Europe and also the US and some other countries that are associated with the West. So this happening, we have seen a lot of responses from a lot of governments trying to pump up their oil supply. So in the US, we saw President Biden travel to the Middle East trying to beg Saudi Arabia to raise output. But what actually happened yesterday is that they slightly lowered their output, which is an action that contributes to higher oil prices. So at the same time, we know that the US has been tapping its own strategic oil reserves. So most of these major economies, they have their own strategic oil reserves. Just in case there is a shortage, then they release these reserves in order to maintain some good supply, which make sure that the prices remain low. So what we have been experiencing in the last 1 week is strategic oil reserves in the US being released in the market, creating more supply in the market, which has suppressed the prices and kept them down. However, I think this is only temporary. So with a low of about $85, we have seen a lot of support happening here. So it happened sometime back in mid-August, late August, and then towards the end of August, and then entering September, we are seeing a lot of support happening at around $85 per barrel. So from today going forward, possibly, maybe this will be a major bounce. And if this happens to be a major bounce, then the potential is that oil continues running towards the upper side. So from a larger time frame perspective, this is what we have been seeing. So since the US started tapping on strategic oil reserves, we have seen oil drop from a high of about $121 per barrel all the way down to 85. So if you look at the correction here, we are talking about, just want to measure this quickly. So we are looking at something like a 29 to 30% retracement, not yet 30, about 29% pullback. So oil prices were able to pull off for about 29%. And this was also experienced with the inflation rate in the US, where consumer prices went down for a while. So inflation was slowing down for a while from 9.1% to 8.5%. But the trend may continue, especially considering that now Europe doesn't have any gas coming from Europe. So they're mainly depending on energy from other sources. So a very interesting perspective, especially if you are a US oil trader. Remember, this is also described as the WTI or the West Texas Intermediate. So feel welcome to the session if you just joined. If you have any questions, feel free to type those questions in the Q&A section, and I'll be responding to those questions directly. So I see a lot of activity. Awesome. De Castillo, welcome. I'm assuming that's the pronunciation for the name. Hello, Caleb, Euro JPY, please. Yes, we'll be looking at that too. So I know we have a lot of beginners, people who just joined the session. So I'd like to begin by mentioning that we have a novice to pro series that is designed to help you transition from a beginner to a professional level trader. This is available from the FX Pesa channel. So just go to the FX Pesa channel on YouTube and then check the novice to pro series. It will help you transition from a beginner to a professional level trader. So this particular session is designed for the active traders. So trying to understand what's happening in the markets and where the key levels lie in the market. And once you understand these, then you're able to make your own informed decision. So make no mistake, this is not investment advice. It's not designed to tell you what to trade or when to trade or where to trade. So it's only educational and informative. So once you learn these, you do your own analysis, practice your own risk management and due diligence before making your trading positions. So now that that's behind us, the next part I want us to focus on is why we do this session. So this particular session is majorly described as the US market open, and we mainly focus on when the US market is opening as a result of what is happening among the various sessions in the market. So we normally have 4 sessions in the market that run for 24 hours a day since they are all overlapping. So using Kenyan time at this particular time, let's say I use my 24-hour time here. So from exactly midnight, this is when the Sydney session starts. This is when the first banks in Australia are opening, and they will mainly trade for around 8 through to perhaps 9 hours. So by the time the Sydney session is closing, then the Tokyo session has already opened somewhere around 3 a.m. Kenyan time, and then runs for about 8-9 hours and closes at 11-12 a.m. That is midday. So by the time the Tokyo session is closing, then the London session has already started, and the banks in England and the rest of the Eurozone have already opened, and this happens at 10 a.m. So from 10 a.m., they run all the way up to 6 and then 7 p.m. This is when the last European banks are closing. And by the time they are closing, then the American session has started. So in the New York session, market opens at around 3 p.m. Major activity will start at 4 p.m. and then run all the way to midnight. So if you look at this curve of trading volume, you'll notice that the volume is lowest during the Sydney session, starts picking up when you have 2 sessions overlapping, that is Sydney and Tokyo. You have some high volume here, then slows down, and then starts rising once you get to the London session. So by the time you get to the London session, Sydney is already closed, so you have an overlap between Tokyo and the London session. So volume significantly starts to rise, maintains a high level, and then once you get to the New York session, where there's an overlap between London and New York, then there's a lot of activity as most Europeans and Americans are all trading at the same time. And when you talk of Americans, you're talking about literally all the banks operating in the US, Canada, Mexico, and all those other regions. So when you combine these, then you have the premium top activity, top volatility happening somewhere between 4 p.m., 5, 6, and 7 p.m. So these are the most active hours in the market, and that's why we do this session as at this time. So now that that's behind us, I know now a lot of traders will understand why we do these sessions now. You will notice this particular pattern happening here on US oil, where after this bottom, the market entered into this pattern from a bottom here, a high followed by a bottom, and then a high, and then a bottom. So we are trading at a major support level here. And if this happens to hold, then we could see a continuation towards the upper side. But then if it doesn't, then it's also important to focus on the lower side. So if US oil happens to pull back downwards, it could test $85 per barrel. And also, if it goes a little bit lower, then this particular trend line will be important. So $84 per barrel might also be an interesting area. That is, if we were ever to see these market going back down and then also down lower to 84, then we could have a major support level here. However, basing our judgment on the support level that has been repeated a couple of times on the $86.765 level, then if this particular bounce happens to hold and the market continues going up, then the potential for the market rising all the way up is a very interesting opportunity that could play out, and you could see the market hitting $99 per barrel. So $99 per barrel is a potential opportunity, especially if a new rally starts from here and we start seeing oil prices go back up towards the upper side. So that's with oil. Now we can move on to something else. US 500, this is the S&P 500 index. So remember, we are still in a bear market. The bear market started on the 3rd of January. So this is when we had an all-time high in the S&P 500, which ended the bullish cycle. So we had a bullish cycle that had lasted a couple of years. So market was consistently going up until it hit this high and then started going down. So since then, you can see the number of swings you've had, the market going down and then up and then down and then up. So this was somewhere around the 29th of March. Then a sharp drop before the market rallied all the way up, and then it hit this resistance. This was last month, somewhere around the 16th of August. So since then, you can see the sharp drop that has happened, basically indicating that we are in a continued bear market. So right from the top that you have seen, or the high of the year, up to the current price level, the S&P 500 is down 18.15%. So judging by that and the original trend we are seeing here, then it's very clear that after the rally that we saw lasting about 9 weeks, this was the rally. Market went all the way up here through this particular set of trend lines. So you can already see what was happening here. So market rallied all the way up. So you can choose to use this particular high or get a little bit more precise with this. So notice how the market rallied and goes to resistance. And immediately after hitting resistance, we have been seeing some strong bearish momentum. So assuming that this particular trend continues, then we might be looking at something along these lines. So we have an outlier, one point that doesn't tally up with the others. So the outlier seems to be the rally that we saw here, attempting to break before going right back into the pattern. And also on the lower side, on the 1 hour chart, it's a clear channel indicating bearish momentum following this particular path. So if you look at that, and now I just want to remove this just to make it simpler for everyone to understand. There's a sharp drop. Market keeps oscillating, going down and then up, down, up, down, up, and down. And now this is what we have right now. So market has been going down. You can see what happened on Friday last week. From Friday, yesterday, it was a public holiday in the US. The stocks did not open, so there was no much movement in the S&P 500. So what actually happened is that the market entered into a flag. So from the 15 minutes chart, you can easily identify the flag where the market went down and then up, kept trading here, went to a low of this point and then higher of this point, low, high, and this is the current price now. And now, if you notice from the 1 hour chart, we are rapidly approaching the upper trend line here. So if let's say the market gets to the upper trend line, then we could be looking for a potential entry for a short selling position. So sometimes when the market is headed towards the upper trend line on a bearish trend, it may take time and a lot of consolidations, but once it gets there, then we expect a strong momentum. In this case, particularly, we expect a downwards momentum such as this one. So after getting to the upper trend line, made a sharp drop, struggled to rise all the way to the upper trend line. But then if there's a break of this particular lower trend line here, then there's a potential you could see some further downside. So from the 1 hour chart, this is how it looks like. So potentially, I'm talking about the market rising. Let's say here, I'm not sure whether that will happen or not. But then the idea is that the market now drops towards the lower trend line. And from then you can identify a trading opportunity, especially on that particular upper trend line. So this is the idea right here. So market has really struggled. So if you use the 15 minutes chart, then you can easily identify the momentum since yesterday. So if the market happens to find a resistance and you see a strong entry by sellers, then the idea is to go downwards as the market continues with the bearish momentum. So from the 1 hour chart, that's how it looks like. From the 4 hour chart, it looks like this. So potentially you could see the market dropping all the way down, or even for a longer term period, then you could see the market testing a new low that is below 3,636. So I know it's very hard to ignore Europe and what's happening in the European continent. So if you check, let me just make sure that we are looking at the same stuff. So if you check the German 30 or the DAX, you'll notice that it has been on a bearish momentum. So a similar pattern with what we have seen with the S&P 500 at the beginning of the year. This is the 5th of January, new high for the DAX. Market drops sharply downwards, hits a support level, goes up and then down, and then hits another high here. So in this case, this was in 6th of June, found a resistance, went back down and then up, then recently found another high on 16th of August, then dropped sharply, and now it seems to be pulling back up. So with this in mind, you'll notice that, that the highs are getting lower and lower. And now if we zoom on this, you'll notice the most recent pattern where, let's say we use the 1 hour time frame, you can notice from this resistance and then a resistance again, a resistance and then resistance. And now as we speak right now, the market is approaching a major resistance that has been holding for the last 3 weeks. So the very interesting resistance level here has already been tested. So you can see the sharp candlestick, green with a long tail to the upper side, indicating a rejection of higher prices. And now the market is attempting to test the same price level again. So the idea is to look for signs of weakness. So if there is a signs of weakness or signs of bearish entry, then the idea is to look for a position towards the lower direction or towards the lower trend line here. So a very interesting idea here. But then if the market happens to break this level, then you might look a little bit backwards, maybe last week but one. So if the market happens to break this level, then we could also see a rally towards this particular level. And this is 13,146. While on the lower side, you look at the key price level here is 12,554. So very interesting level in the German DAX index. So besides that, we keep on moving. You look at the NASDAQ, Tech 100, similar thing with what we have seen with the S&P 500, very strong relationships here. Market was strongly moving upwards on this particular momentum. So after it hit this particular high, changed direction, started going down, and now the downwards momentum is very similar with what we are seeing with the S&P 500. So this being our lower side trend line has been supporting very well. And also if you look at the ceiling or what we may describe as the resistance, then you'll notice that there's also an outlier on the US Tech 100 or the NASDAQ 100, but the market went back into formation again, up, down, up, down, up, down. And now the market is attempting to retest the upper trend line. So the idea here is to look at the prices at this level. So if price happens to hit this level and finds resistance, then you might want to look for a short selling position. So on a lower time frame, this is the 15 minutes chart. Then it's the same idea, market trading along this particular flag. So it's not as smooth as what you have seen with the S&P 500, but the idea is quite clear. So if the market keeps on pressuring and moving towards this particular direction, then the idea is to, let's say, wait for the market to hit this particular resistance. And once it does, then look for a short selling position. That is if there is a confirmation that sellers are strongly entering this particular market. So from the 1 hour chart, this is how it looks like. So let's try and compress these so everyone can see. So potential target somewhere around 11,651. That is if the market happens to have strong bearish momentum, just like we saw here in the previous force break here. So something like this could happen in the US Tech 100, and opportunities could rise here. So the key price level to watch is this particular resistance here. So key price level is 12,260. So if the market happens to break, then you can already see there is a major resistance level that was held in the last 2 weeks. So if there's a break, then a target of 12,461. So a very interesting level. So remember, price doesn't have to break, doesn't have to bounce and get to this level here. Also, a straight out break of this trend line here could also signify bearish momentum, and you could go with this rather than wait for the market to get here. So a very interesting level to observe with the US Tech 100 or the NASDAQ 100. So as for the Euro USD, a strong bearish momentum. Remember, we are trading below parity. This is unprecedented. This is happening for the first time in 20 years, where 1 euro is valued lower than 1 US dollar. So parity seems to be an interesting price level. So you ought to have this line in your chart. That is 1.00000. So you ought to have this line here. It was acting as support here. Market rallied, got to the resistance, went back down, broke towards the lower side. So attempted to break parity for quite a period of time. You can see the attempts here on the forward chart. So kept going up, broke temporarily, went back down, drove higher or kept playing around parity, went down and then up, found resistance, went down and then up. So if you look at the price action yesterday, the market was strongly approaching parity, didn't quite get to parity, found resistance this morning, and then started going back downwards. So this downwards momentum is expected to continue for as long as there is a tension between Russia and Ukraine, because majorly it's now very evident that this war is affecting Europe. So the way it's affecting Europe is through energy prices, by Russia cutting the supply of gas and oil to the Eurozone. This is forcing Europe to buy energy at very high prices. And some economies are really hurting, with Germany paying energy prices at 9 times higher compared to the same period last year. If you look at countries like France, they are paying 10 or even 11 times higher compared to the same time last year. So this is taking a big toll. It's taking a big hit on demand, because if consumers are spending more on energy, then they have less amount of money to spend on other products, which is weakening the stock market, as we have seen with the DAX. So people are betting on a weaker euro, and you can see it has been quite a consistent move throughout the year. So right now, we are not at a major support level yet. So if the euro proceeds and continues moving down lower, then the expectation is that it breaks this level and goes all the way down to this area here. So we are talking about a price level around 0.969. So if we adjust this, it should be 97. So somewhere around 0.97. So 97 is a key target for Euro USD. And now, if you check, you'll notice that there is a major support level here that is being tested. So it was the low of last week on Friday. So yesterday's low and then today's low seems to be at 0.99. So if the price happens to break here, which is what we're experiencing right now with the current candlestick, then at the close of this candlestick, it will be a confirmation whether you have completely broken this level, and we could be looking at some further downside, perhaps towards the 0.97 level. Of course, there is intermediate targets here. You could have 0.98 as a target before you get to 0.97, but potentially, if you look at the technicals, they're indicating 0.97 as the major target here if the price happens to break the support level here. So still, I want to check on what you guys are doing. Any questions? I would just want to check this to make sure I'm not missing anything. So hi, I'm Ali and I'm a beginner. Glad to be here. Yes, thank you. So let me try and look for the beginner session where you should start. And then once we get this, hopefully it will help you move in the right direction. So you should be able to look for Novice to Pro series, episode number 1, and then start from there. So it will make it easy for you to transition and understand some of these concepts, especially if you have never traded before. So there's the link on the live chat section. So that's the very first episode of the Novice to Pro series. And once you go through it, it should help you transition from a beginner to a pro level trader. So glad to be here. Welcome, Charlie. Welcome, Jimmy. Please, today I ain't late much. Glad to be here. Welcome, Chris. Thank you, guys, and welcome to the session. So let's proceed. So that was the Euro USD. Pound USD, same stuff. Very similar with what we have seen with the Euro USD. So from the daily time frame perspective, longer term continued weakness of the pound against the US dollar. Remember, the war in Ukraine between Russia and Ukraine is majorly affecting Europe, and the UK is part of Europe. So also we have seen extremely high energy prices in the UK, among other challenges that the economy is experiencing. And this has been driving the UK pound against the dollar downwards. So sharp drop. So if you look at the last 1, 2, 3, 4 weeks, pound losing against the dollar. This week started extremely strongly, where the pound was very strong against the dollar yesterday. You can see the sustained momentum here. Happened to break some trend line here that you are following for the last 1 week. So if you are observing this, then you notice that this was a strong trend line break that was happening yesterday. So the trend line break is right here. Towards midnight and the opening of the day today, market went up, found resistance, and not much of a movement here. We're talking about last day's high, seems to be the resistance today. Immediately changed direction following the dollar strength. And since then, what we are seeing is an attempted continuation of the original trend, which is the bearish momentum or the dollar being strong against other currencies. So dollar strong against the pound USD, dollar strong against the euro USD. And also, if you look at the yen, cruising to a new high. So from the daily chart, momentum seems to be getting higher, pullbacks, higher, pullback, and now we are in an impulse movement. That's on the daily chart. From the forward chart, you can see it's 1, 2, 3, 4, 5, 6 straight weeks where the dollar has been strengthening against the yen, as the divergence is largest in USD against the yen. So the yen is facing a lot of challenges, as the Bank of Japan is unable to hike interest rates. So it has maintained low interest rates in order to stimulate growth and also to stimulate inflation towards the positive direction. And this is one of the economies that is working in a different manner compared to other economies. So if you look at the Eurozone, if you look at the Euro, you look at the UK, you look at Canada, the US, Australia, New Zealand, most of these economies have been experiencing high inflation. However, for Japan, they have not been experiencing high inflation. So the government was able to consistently maintain low interest rates while doing a lot of stimulus packages, which have had a negative effect on the Japanese yen. So with the Bank of Japan buying literally almost all of the government bonds floating in the market, this has basically increased the supply of the Japanese yen, which has led to lower valuations. So if you look at the performance of the yen, let's say since the since the beginning of the year. So let's try and look at the beginning of the year. The year started on January 1st, so somewhere around here. So this is what I'm talking about. The year started here. So this was the exchange rate right here. And now, if you look at this particular valuation here, it means that the Japanese yen has lost 23.75% against the US dollar. So this is a big thing. So if you are living in Japan, you would probably be converting your Japanese yen to US dollars just to retain value. So if you have a savings account, you'll probably be saving in form of US dollar because it seems to be holding more value compared to Japanese yen, which is consistently losing value to the dollar. So the alternate effect basically means that there is a more supply of Japanese yen than dollars, and this is driving the exchange rate even higher. So what investors have been doing is looking for this kind of pullback so that they can squeeze in bullish positions. So every time there's a pullback in this particular market, investors have been going for long positions or just adding into their positions. So if, for instance, you bought here, the market goes back down here, you don't cross, but you add another buy position. So market goes back up, pulls back down, you add another position, and every time there's a pullback, you keep adding those positions because fundamentally we are expecting this particular trend to continue towards the upper side. So if you're not already in the trade, this is not the right time to go for a buy position. So you should probably, in my opinion, wait for a pullback, and then from the pullback, you can squeeze in a long position. So AUD-USD, we know what happened early this morning. So the Reserve Bank of Australia raised interest rates by 50 basis points to 2.35%. These had a very strong positive impact on the Australian dollar. So you can see the sharp gain that was experienced right immediately after the announcement. But then after this happened, notice that the dollar is still very strong and investors are betting on this. So what happened during the Tokyo session, once the Japanese banks opened, they started buying the dollar against the Australian dollar, and then the overall effect was downwards, where the dollar is now has now been strengthening against the Australian dollar, maintaining the bearish momentum, and also the particular pattern we have been seeing here, indicating some further downside for the Australian dollar against the US dollar. So right now may not be like the best point to, let's say, enter this particular market. But if you're already in the market, then a potential target could be on the lower trend line. So somewhere around this area here, that's 0.67395, or basically 0.674. So around 0.674 could be a nice target, especially if you manage to capture this entry here, which happened on a major resistance level, targeting some lower prices here. So that being mentioned, I believe we have covered some of the major currency pairs. We have looked at the major indices, that is the NASDAQ 100 and also the S&P 500. And also we have looked at US oil. So the last asset that I mentioned and we have not covered is gold. So where is the chart of gold? Okay. So here is gold. This is what we are seeing. Continued strength in the dollar remains the major theme in the market. So has been consistently pushing gold downwards. So if you look at this particular trend here, you'll notice this momentum here. So just trying to make sure that my line fits perfectly. So this was the recent high happening on the 12th of August. Another high here happening on the 25th of August. And now you can see that this attempt by gold to go back up was met with a lot of supply. And now it seems like gold is going back down. So from these, this was, I believe, Friday last week. Gold gaining against the US dollar. Remember, Friday was the NFP or the non-farm payrolls. So we had a breakout. The trend line was here. So this was the prevailing trend line. So the market was going downwards. Gold broke this level, prayed here, and then moved even higher. So Monday sideways, no much activity yesterday. Then today, some further upside before the participants in the market decided no, the dollar is still strong and we're betting on a stronger dollar, and they reversed course. And what we are seeing here is gold weakening further against the US dollar, breaking the day's open, and perhaps it could be breaking yesterday's low, and maybe some further pressure towards the downside. So a very interesting perspective here, where we could potentially see gold drop to the previous low, and this is the low of last week, where it managed to touch 1688. So 1688 was a key price level for gold. So we could potentially see this, especially if this particular level is broken sufficiently. So if there is a very strong indicator that gold has broken this level, then potentially you could see it drop all the way down to 1688. However, on the contrary, if gold manages to hold these as the support level, you can see it was the support yesterday, then momentum towards this particular Friday's high, and also today's high, then this might be very interesting. So today's high is at 1726. So a rise towards 1717 could be a nice target, and also some further momentum towards 1726 could also be very interesting trading gold. However, judging from the price action, market rallying all the way up and then strongly back down, there's a good chance that we could end the day lower than the open. So maybe some bias towards the lower side, targeting 1688 or even just plain 1700, which also remains within the same zone. So 1700 is within the same zone. Where is that? So this could be a short-term target, 1700, and then the bottom level at 1688. So I'm hoping that that was helpful. Hoping that creates value for you guys. So just one asset that was requested within the session. So once I cover this asset, then we conclude the session, and hopefully we get to meet on the next session on Monday next week. So Euro JPY is the request here. So the euro is weak, the yen is weak, but which one is stronger than the other? So clearly, the Japanese yen is the weaker one because it's unable to hike interest rates. Also, despite the euro raising interest rates, it's also having challenges with the weaker economies within the eurozone being affected by the bond spreads. So what we are seeing here, let's say from the 4-hour chart, is a market that has been making some major swings. So if you look at the daily chart, clearly it's a sustained bullish momentum. So you can all see this. So from this bottom here to this bottom here, so just to get an overall picture of what's happening in this market, then it's an easy task here. So if this is the overall picture, and this is from 2019, where the euro is consistently gaining against the yen, then you can identify the swings where the market is moving towards the lower trend line, such as this one, facing resistance here, and also support here. Not drawn to scale, just to give you an idea of what has been happening with the euro against the yen. So then you can notice the sharp break here. Market goes back, retests the area, and then that is all the way up to resistance. So this resistance seems to have been tested a couple of times. So all the more very relevant resistance level here. Then the market pulls back down, forms a support, another support, another support. And if you use the 4-hour time frame, then you'll notice that the support levels are giving you an idea of what was happening here. So market was making major swings towards the lower side and also major swings towards the upper side, forming some form of resistance here. So I hope this gives you an idea of what was happening in this market. So since hitting this high, goes back down, another high, down high, and then a low, followed by a high, and then a low, followed by a high low, and then this area here. So the most recent pattern on the 4-hour chart indicating bearish momentum, where the yen was particularly strengthening against the euro. Now, once we go to this level, notice that this bottom coincides with this particular high here. So the market started changing dimensions here. So since then, market rallies to this point. And also, if you look at the lower side, this is what we are seeing. So just a moment. So market swings up and then down, and then up and then down, and then up, gets to the trend line here, breaks, goes back to retest the area, and then rallies. So it's clear from this particular perspective that we were seeing the market attempting to put pressure towards the lower side, forming lower highs and also lower lows. But then since then, we have been seeing over the last couple of weeks, and I'm talking about the last 5 weeks, the lows have been getting higher. So even the low for this week is also significantly higher than the low of this other week. The high of this week is significantly higher than last week's high, and this other week's high, indicating that now we're in a bullish momentum. So with this in mind, if you look at the bullish momentum, maybe it's perhaps it's not the right point to make an entry. But also, if you look at the resistance level here as a major target, then there's that potential that the market could continue running and only stop at 142.17. However, if the market happens to pull back down again, then this retest was very significant. So this is the low of this week. So since the market opened this week, has been consistently going up. So if it was to pull back, then this would be a potential support level here. So the support level here is at a price level of around 138.683. So if the market goes back down, 138.683 is a key level support here. If it manages to rally, then 142.17 is a very interesting target. So that being mentioned, I would like to thank everyone. Thank you for your time. Thank you for your participation. Always good time interacting with you guys. I hope to see you on the next session. So what about the new Prime Minister? Can we have some strength on GBP USD? Yes, I acknowledge we have the UK has a new Prime Minister. For them, the political changes don't affect the market that much compared to Kenya. So we might be more focused on the policy changes. So now that she is the Prime Minister, she might have some policies to help support the economy, especially the high energy prices. So if she manages to pull or push through a bill that will give stimulus packages to the UK, then that would be inflationary to the pound, and the pound could continue losing towards the US dollar. So any form of economic support will weaken the currency. So we'll be focusing on policy and the potential that she passes a strong policy to support the households in the UK that are facing high consumer prices. So thank you very much, guys. Thank you for your time. And also, if you want to go through the session again, it's available on YouTube. So you can just go back, rewatch the session again. And if you manage to miss our analysis on gold, Euro USD, as well as Pound USD, then you'll find all of them available here. So a good question, this one I won't miss, is EGM security legit? Yes, absolutely. We are a big broker under the Equity Group, which is a global company. We are licensed and regulated by the Capital Markets Authority of Kenya. And all the funds that you deposit in your trading account are kept in a segregated account, which is separate from the company's accounts. So even if the company was to go down, then your funds will still be there. So everything is secure. Trust this. You can always verify with the CMA. And once you do this, then you should know that we are the top broker. Just open your accounts and start trading with us. So thank you very much, guys. See you on the next session.